Welcome to this webcast, a short video interview offering you the chance to get acquainted with one of NNIP's investment professionals. Bregje, welcome.
Thank you.
This past quarter was characterized by a remarkable low-yield environment, and it also triggered investors to seek for ways to position their fixed income portfolio. What was the main highlight for you in this past quarter?
Yeah, so let's say the three main market drivers was, first of all, the increase in bond yields, government bond yields. We actually anticipated this in the fund, so we took on a lower duration position at the right time, so that was good for performance, of course. Increasing government bond yields also had its effect on investment-grade credits. Next to that, we also saw a heavy issuance in that market, which led to supply indigestion. Actually, investment-grade credits showed a negative performance over the second quarter. And of course, very fresh in our minds is the Greece story. When Greece stepped out of negotiations about their aid package, markets reacted quite negatively, or there was a lot of uncertainty, which was also a very important driver over the second quarter.
Let's continue on the topic of Greece. What do you think lies ahead?
Yeah, we feel that the immediate effect of Greece in financial markets will be much less than what we've seen the last couple of weeks. But we need to follow the implementation risks that still remain very closely. Next to that, there are also some things outside of Greece that need to be followed. So there are some discussions between the IMF and some European countries on debt relief for Greece. And next to that, there's also some discussions between European countries on the one hand, common rules that need to be credibly enforced, and on the other hand, some burden or risk-sharing mechanisms that need to be put in place. So those are also very important discussions to follow.
Those are a big number of elements that are moving. So.
Yeah.
Taking that into account, what does that mean for the future positioning of your fund?
Yeah, so currently we are neutral on duration, and we have a small underweight position on spread products in general, where we feel that for investment-grade credits, as we touched upon earlier, there are still some issuance issues in the market that we first want to see played out. Next to that, we're quite cautious on emerging markets. So, like we touched upon earlier, some bad news in China, oil prices on the decline. Oil prices could also have a negative effect on U.S. high yield, for example. Then looking at what we're positive on currently, we're overweight in European high yields, where we think they're very attractively positioned. So that's how we're positioned at the moment.
Looks like there are enough positives to look forward to. Thank you.
Thank you.
And if you would like to find out more about this strategy, visit us at nnip.com.